Hey guys, welcome to our tutorial here on SFX Signals and Overlays by YinYangAlgorithms. So we are going to be discussing how this indicator works, how you can go ahead and use it to trade. It's going to help you identify buy and sell locations, reversals, volatility zones, support and resistance, overbought and oversold zones, and it's going to help you by showing you where the change of characters and break of structures are when you're trading. So there's lots of things going on here. It can probably be a little confusing to look at when you first come to it, which is fine. It's kind of the point of this tutorial to kind of, once you know how to use it, it's very simple, like stupid simple. So just from the looks of it, you can see here, essentially what it tries to do, which, what most people are probably coming here for, is understanding the buy and sells. So I feel like for your average trader that maybe, they want all the important data without having to look through too much, this is a great indicator for you because there's so much logic behind all of the calculations for all this stuff that, once you just understand looking at stuff like this, it's going to make trading a lot easier for you. So let's first dive into the settings just for 2 seconds here, just so you can kind of see what it looks like. So there's not too much to it. Now, we keep it that way simply because we don't want you to have to worry about, editing values and stuff like that to us. A user interface should simply just be drop downs or toggles. I don't want you guys having to, enter in random numbers and trying to find the best values and stuff like that. We do that for you, and we're trying to save you time, and time is money, right? So essentially, we have multiple different sensitivities for a bunch of different stuff, which factor into all the calculations going on here. It's all the calculation factoring is just these guys right here. So the version numbering, essentially, you can change the versions. So depending on which version you're on will affect what the type of information you're going to see. Now, this can be very important because some versionings will change some different calculations, and if you get used to a certain one and you base your entire trading strategy over that versioning, then you might want to stick to that. Because, sometimes if you have something and it's not broken, why change it, right? So that's kind of the whole point of the versions. If we're making quality of life updates, we're making updates that we think work overall best for generalized trading pairs with a heavy influence on Bitcoin and gold, then that's us. But if you're not trading that and a different version worked better for you, don't update. That's all I gotta say. So we're currently on version 1.2. So there is AI for all the different sensitivities. So it does have kind of factoring into a bunch, like I think it's about 15 different crypto trading pairs and gold, silver, a few other stuff like that. That's factored in to help give it a little bit of fine tuning in a sense for some of the more popular traded stuff. And if it doesn't know the trading pair or the time frame per se, it just does its best to kind of assume what it thinks is the best. So you can feel free to just leave it on AI, but honestly, we do recommend you manually fine-tuning it. So when we say fine-tuning, essentially all we want to do is make it so that, for me personally, how I like to do it is I just focus on the buy and the sells, and I try to make it so that looks the most appealing to my eyes. So now one thing I do want to cover here, the objective of this indicator isn't to give you every location of buying, selling that is perfect. The objective is that if you were to buy at the buy signal and then sell at the sell signal, did you make profit? If that was a long, so if you're just buying and then selling, no big deal. Now, if you were longing and you closed your long at the sell signal and shorted and then closed your short at the long signal, and then vice versa, what's the profit going to look like? If you had a double buy, do you double in? Do you, is that your stop loss? That kind of thing we're going to go over real quick right now, just because I think that's important, just so people understand kind of what to look for. So as a general standpoint, you're not going to get every extremity. Like you'll see here, there's a sell signal right here. Well, look, it went up, but it did believe that this was a good time to sell. So just because it went up and just because we're in a bear market right now doesn't mean that this was bad. So the best way to say, like for you to understand that, is that it's not going to be perfect in the sense where it's always going to give you the highest sale, and you're going to see sometimes, like there was in the version 1.0 that generated it, sometimes you'll see a sell and then a sell. Now, if you look here, sell occurred. The price did come down from the sell signal, but then it went back up again. Sell signal occurred here. This one kind of seems a little bit like a false positive. Does happen occasionally. It did sense that there was a good chance to sell, but obviously that just didn't happen. So not everything's going to be perfect, but if you did buy here and sold here, you made profit. Yes, you could have made more, but you made profit. And at the end of the day, it's not about always maximizing the amount of profit you make. It's about always consistently being profitable in the long run. And that doesn't mean every trade is going to be profitable, but if you, depending on how much money you're playing with and your target profit and your target stop loss, as long as you're profitable in the long run, that's all that matters. So even if you're only 70% profitable within trades, but say you did a 1-to-1 ratio with stop loss and profit, let's say 5% profit or 5% loss, whatever hit first is good. If that was your trading style and you went on signals, then that could work. Or vice versa, if your trading style is every time a buy signal comes up, buy. Every time a sell signal comes up, close that buy. That could work too. As long as it works 70, 80% of the time and you're getting good profit, that's all that matters. But you can't expect there not to be false signals. You can't expect to never get a loss. That's unheard of in trading. You're never going to find anything that will give you that. And if someone claims that they can, they're lying. So we're obviously not claiming that. You're not going to get perfect trades, but just looking here, you can see that we do help you identify a lot of lows, a lot of the highs, where there's going to be movement coming up, where there's potential for a reversal coming down, but false. Could have came down, but it went back up, and then, you get another one here. So you see this stuff here, like it's going to happen, where this could, like, you still made profit. Yeah, could have been higher, but you still made profit. So just kind of coming in here, we're just looking at this kind of stuff. It's important to factor that in. That as much as we can try to help identify the highs and the lows and where good times to buys and sells, and ranking them with ratings on how strong of a buy or sell it's going to be. Lower numbers, less strength. Higher numbers, the higher strength. The better informed you can be in your decision-making process when it comes to trading. So we're going to kind of go over a little bit of different stuff for everything, just so you kind of understand a little bit what all of it does. So trend sensitivity. So your trend sensitivity is essentially the colors of these bars. So if we were to turn this off, and go to standard, this is your standard bars. Now, personally, I don't really like looking at this. Like, to me, this looks confusing, and this doesn't. So with this, you can see the red means it is very bearish. So it is dumping, going down. Orange and yellow essentially mean they're relatively neutral. It could be bearish, it could be bullish, but an orange means it was bearish and it's moving towards bullish. A yellow means it was bullish and it's moving towards bearish. Green is bullish, red is bearish. So that's essentially how you can look at it. So You can see here, so red, so it's bearish, it's moving towards bullish, it's bullish, it's kind of moving towards bearish, which is kind of weird because it's going upwards. But so there's many different factoring calculations into this, and it's kind of just trying to show you sometimes that the trend could be dying out. So when it says moving towards bear, like when I'm saying moving towards bearish, like as in like it could be going down, it doesn't mean it's going to necessarily go down. And in a bull market, especially where it's going up, 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 you're going to see some yellow in there every once in a while as like there's consolidation and stuff like that. Consolidation can trigger a lot of this stuff too with the color changing, but that's good because you can see when stuff is kind of, losing a little bit of momentum, maybe the volume's dying out, it's not really having much highs and lows, the price bar after bar is kind of going lower and lower and lower. All of this indicate if it's getting close to, your median right here with inside your zones. They could all indicate, there's a higher chance that it's going to have a reversal than, a green. A green generally won't just crash because it likely would probably change colors before then. So that is what your trend sensitivity does. Now, it is on AI, so AI goes to identify the best one. Now, one thing we do want to cover is that medium is the only one where you're going to see all the different colors, which is essentially why it's our favorite one to put on personally. I love medium. I pretty much almost always just have it on medium personally. You can change it. So Sonic. So anything else, you're just going to see kind of red and green. It's Christmas now. So all you're going to see is the red and green. Sonic means that it's going to change really quickly. So the second there is any drastic change going on, you're going to know that that's going on. It can hold its trend for a long time going up as it's going up and vice versa going down. So you're not going to necessarily see all these pitter-patter green, red, green, red, green, red bars, which I hate when I look at some indicators and I see that stuff and I'm like, oh, this is terrible. How do you know? Like this one where it's like red, green, a red, and then green. It's okay if it happens the odd time like that, but if I see it too much, I personally don't like that stuff. So this is pretty good at doing it. Honestly, I do like Sonic for that sense. It's pretty good. You can go to fast. It's going to be a little bit slower, and you are going to see a little bit more of that red and green stuff, which I just saying didn't like. So I do like Sonic more than fast in that sense. Slow, likewise. You're going to not really see too much of that like back and forth red and green, and you're going to see a lot more consistent trends. So like this whole thing right here is all green. You're going to see a lot more strong, consistent trends, but you're going to miss out on a little bit of the initial movement. So like if you go back here to say Sonic, you're going to see the red started here coming down. And it even picked up a little bit of a buildup on this green here. Now going back to slow, this whole thing is red, but rather than starting red here, it starts red here. So it's a little bit slower, but it's also a little bit more consistent where, it didn't get, a little bit of a false positive with this this fake out right here. So, and then you got Sonic, Snail, sorry, which is even slower. So it doesn't start going down till here, and then it doesn't even start triggering it going up till here. Now, slower can be good, Snail can be good, depending on your trading style. But personally, I would pick between slow, medium, and Sonic. Fast and Snail, they're there, but just to kind of bridge a gap between different speeds and settings and the way things can transition. But I don't necessarily recommend using them, if that makes sense. You know what I mean? Like, they're there so that you have the option. Maybe you're trying to look at some stuff. But yeah. So we're going to go and move on to signals now. Let's just throw this on medium. It's the one that we like. I like. It's nice, in my opinion, to see the, the build-ups, the breakdowns. When it's just green and red, sometimes you miss a little bit of that build-up, breakdown kind of information, and it's nice to see. So, signal sensitivity on AI, it's just gonna pick whatever it thinks is best. So let's just go to medium, just so you can kind of see what medium looks like. And I guess the AI is on medium. Okay, so pretty sure it's on medium there. So let's just go to Sonic so you can kind of see what happens. So on Sonic, you're going to get a lot more extremities. It's going to get a lot more of the very lows and the very highs, so a lot of the really good in and outs. If you're swing trading, it can be really good. Now we're on the 1 day here, keep in mind, but like if I drop down to say, let's go 15 minutes. So in 15 minutes, if you're say swing trading, you're trying to do multiple trades a day, it could be good for getting a lot of those extremities in and out. You're gonna have the odd fake out, but likewise, as long as you're still getting a profit, bought here, sold there, profit, bought here, sold there, profit. If you're always going into a long or a short and canceling on each, playing a higher risk, potentially higher reward because you're doing more trades, but higher risk. Now, I do like shorting during the bear market, but we're in a bull market right now, so I don't short. I would just long, close the long, long, close the long. Didn't matter. Long, close the long, long, close the long, long, close the long, long. I'd probably still be in it, but like you could have settled a stop loss potentially, because there is times where your long might not be profitable. I'm trying to find one here. This would have been small loss if you longed there, didn't do anything, closed it. That would have still been profit. Profit, profit. Would have been this one, but that's still profit. Would have been this one, that's still profit. This one, that's still profit. Yeah, so I mean, like, if you're just, they're all like, what was that? I don't know, like 9 out of 10, it's profitable. Profit, profit. You bought there, is that a loss? That would have been a loss. Okay, so I don't know. Let's just say, I don't know, like 90% of the time you buy and then sell, you're probably going to hit profit. So you could trade like that. You could swing trade on the 15. Now, keep in mind, this is a manual indicator. It is not set up to automate trades. So you do have to keep an eye on this. So if you're swing trading, hey, maybe you want to do less of a time frame. Like, I mean, keep in mind, like that, like this is 1 day. So, maybe you want to be trading nonstop. I wouldn't recommend going anything less than the 5 minutes personally. That's too risky. 5 minutes still works though. Higher risk. Higher risk, and honestly, in my opinion, less reward. You're paying fees. Like, you don't want to trade too much because you get fees on your trades, right? So you don't want to trade too much because even between here, 427, and here, that's about $800. So that was a good trade-ish, but it's only $800. I mean, so you're getting a lot less. And like theoretically, I guess if you were doing it, well, no, yeah, like you're gonna hit a lot more trades. Like if on the 15, 9 out of 10 are good. On the 5, I think I'd say it's probably closer to like 60 or 70% are good. So you're gonna get a lot more trades in per day, but that doesn't necessarily mean profit. So you have to keep that in mind. And like I've met some people that they'll be like, oh, it's not profitable on the 1 minute. I'm sorry, but you shouldn't be trading on the 1 minute. Like, this still is going to catch some good stuff. But like, if your objective on the 1 minute was to do swing trading, like, yeah, sure, all this is good. But if you're doing it for signal, you bought here and you sold it here. That's not good. Like, what's that? 9.5 and 89. So you lost $800. Like, you know what I mean? Like, that's not good. Like, if you're like, oh, but from here to here and that's all good, yeah, it could be. And like a lot of this does look not terrible, but it's also small amounts, like 750, 900. It's $150. So you're doing small little trades. You're paying fees on all of it, and you have a higher risk of the trade not necessarily being perfect. So we don't recommend the 1 minute. I personally swing trade on the 15 if I'm going to do it. 5 minutes, I might look at the odd time, if I'm trying to get an exit, but I only look at the 5 minutes for an exit, not necessarily with swing trades always, but just an exit in general. If I get good confirmation on the one day that I got to get out, the 5 minute can be nice. If I'm looking on the 1 hour or the 1 day, I'm like, okay, getting out is coming up soon. Look at the 4 hour, you see it kind of starting. You look at the 1 hour, it's really happening. Maybe you want to jump down to the 15 and 5 just to like get the actual to the dollar exit. You know, that could work. But aside from that, I'm not a huge fan of, anything less than the 15 or the 5. So now vice versa, what if we went to snail? What's going to happen on snail? So on snail, you're not going to get a whole lot of signals. And like on here, it's just basically sells. You know what I mean? Like the buys are pretty good in the sense of if you bought there and sold there, sure, but buy there and sell there, that's not bad. Buy there and sell there, that's pretty good too. So you could theoretically do that on the 15. Like this whole thing, this indicator is all about tweaking to your trading style to find what works for you, because everyone's trading style is different, and that's why there's so many different sensitivity toggles for stuff, is because everyone likes to trade different. You know me, I'm more of a very slow trader. When I do swing trades, which is rare, it's only when I generally think consolidation's occurring and that it's going to be ping-ponging. If there's potential for it to go really high up or really high down, I don't touch the leverage swing trading. It's too risky. I don't recommend it. But consolidation when it's ping-ponging, sure, why not? But I still don't short during a bull market. So consolidation ping-pong swing trading is just long, close long, long, close long, long, close long. And in my opinion, that is how to get the good rewards of, doing the swing trading with minimizing the risk during a bull market. Because even if you longed and it was not necessarily the best entry, well, it's still a bull market, so the potential for it to keep going up compared to hitting, your stop loss or your liquidation mark is a lot lower. If you're trying to, short also during a bull market, very risky. If you're trying to long during a bear market, very risky. So let's go to talk about zones. Now, zones are important. Why? Because you can see when it's overbought or oversold. When it's inside this black space in the middle, the empty space here, that is good. That means it's in a neutral setting. The neutral line is this middle line that changes here from green to red, displaying the trend momentum. So when the line is green, it means it's a bullish trend. When it's red, it's a bearish trend. When the price is below or above the line is how it dictates the trend. So above the line, bullish, below the line, bearish. Very simple. It's neutral line. But regardless, anywhere in this area is fair value. So when it's inside the red, it's overbought. When it's in the green, it's oversold. So this means it's overvalued. So you don't want to be buying something when it's in the red, and you don't want to be selling something when it's in the green. So now there is times where it goes way up there. So what does this mean? When it's inside of this, the chances of it coming back down are really high. It's too overbought. It needs a correction to stabilize itself before it continues or just does a reversal. There's very few times something just goes up and up and up and up and up and up without doing a correction of some sorts. So generally speaking, it's either never going to go inside of the overbought, it's just going to hit right on the outside or get really close to the outside and then come back down, or when it does go in, it's not the inside of these zones that matter, it's where the next zone starts. So this, for instance, if you're looking here, this matters, this matters, this matters, and this matters. The middle, inside of it itself, doesn't really matter so much, because all of these are crucial percentage points of the zones that, and it factors in all the movement. So Like as you can see here, just nicked it, came back down. It struggled right here, came back. Right about it, right about there. Came up, hit right there. Came up, just barely went out right there. So like these place locations are hot points. See, just touched it, came back. So you don't need to worry about being inside of it. So you can basically assume if it's coming down and you think it's gonna like hit in here, it's gonna hit here, 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 or here before it goes back. Because if it's oversold or it's oversold, it's undervalued, that means it's generally gonna go back up. Maybe not much, might just be a small correction before keep going down more, but it's generally got to go up a little bit. So these zones are good for identifying when a reversal is likely going to happen, even if it's not a reversal that's going to change the character of the movement, but just a small reversal just to help it keep going. So that's kind of the zones. Now we can kind of look over the sensitivities right now. So Sonic is going to make it so the zones change really quickly. And what this means is that it's almost always going to be inside the neutral, and it's almost never really going to hit the outside. I don't personally like to trade like this, but it's there in case someone wants to see it inside of it all the time and only see the extremities that actually do leave, because those are very rare when it's on Sonic. If it was on Snail, for instance, it's going to hit these zones a lot more often. There's going to be a higher chance that it's inside of these zones. It still should try to be inside the middle, but there's a higher chance it's going to get in the zones because the zones move slower. Now, a medium, per se, is going to try to just, meet that right in the sweet spot. I think our AI likes something like slow, which I'm pretty sure is what my favorite is. Yeah, so it is slow. Yeah, so slow, in my opinion, is the most accurate. So, like, for me, trend sensitivity, always medium. For me, zone sensitivity, always slow. Signal sensitivity, I changed this based on the trading pair and the time frame, because I want this to look the most accurate historically for the trading pair and time frame that I'm on, because if it historically is the most accurate, then it has the highest probability of being the most accurate in the future. Now, that's not always going to hold true, but it has the highest probability of holding true. So especially if you backtest it and you keep scrolling and you just try to make sure that you're finding the sensitivity that works the best for that exact trading pair and time frame that you're trying to work with. This is pretty much one of the only ones that when you're swapping back and forth between trading pairs and time frames, that you might be altering, because the other ones you might just find, like me, things that you like the most. Okay, now we're going to go to break of structure and change character sensitivity. Now these are these lines drawn here. So your break of structure is essentially a continuation of a trend. So I'm trying to find here. So like break of structure. Now continuation, meaning it's going to hopefully continue on in that direction going on here. A change of character means a reversal. So, for instance, the change of character here means it's going up. Break of structure means it's going up. Change of character means now it's reversing, thinking it's going down. Break of structure means that it agrees, it's continuing going down. Change of character, it believes there's reversal, it's now going up. Break of structure, it agrees, it thinks it's going up. Another break of structure, it agrees, it thinks it's going up. Now, you want to find the ones that look the best based on what your trading pair and time frame is, once again. Now, that might just be medium for most things. The AI decides certain things, but I believe medium is probably the best for most things. Let's just hop back to the 1 day, because 1 day is what I like to look at for a lot of stuff. So you can see here, it was change of character, it's going down. Besides another change of character, it's going up. Break a structure, continuation, continuation, continuation. So this is what I love. With most break a structure and change of character indicators, it won't show you where the current change of character and current break of structure is. Ours does. So basically what it's saying is that if the price was to go lower than a strong line like these ones means they've been confirmed. The dashed lines means that they haven't been confirmed, they're active. These are the current locations that it has determined, and the price needs to either break below this change character right here, which means it's going to signify a reversal to go down further, or vice versa, go up, break through this, go through this break of structure right here, and that means it's going to signify a continuation going in the upwards direction here. So I love looking at this stuff because, in my opinion, it's the best way of seeing, so you're looking at this. You're like, okay, so we're very, very overbought right now, but if it was to go above this, there's a good chance that it's going to keep going at least until a little bit more. Now we're so close to the 100K mark, I wouldn't be surprised that if it does break above this, that it's going to go somewhere around 97,450. That's my opinion, because 7s are strong when it comes to bearish. Just a little bit below a 5 is strong when it comes to bearish, so 97,400 would be a pretty good spot for a big whale that's a bear to place, a short or something like that in the futures. And if you guys don't know, it's generally the futures that indicates the spot, not vice versa. So if there's a big thing there, like I know a lot of my friends and a lot of people, including me, all look at the futures market when trading spot with swing trading sometimes, just to get not sometimes, always, just to get a good idea of if there's a whale sitting there in the futures trade, there's a good chance that it's going to dictate the spot. Now, you might be thinking, okay, well, there's all these different exchanges, like just because there's a whale in one exchange doesn't mean anything. Yes and no. A lot of these whales look at multiple exchanges at a time, and you're on Binance, which is the king for Bitcoin. If you're watching, the trade book for that, and you see the whale in there, it actually will affect other exchanges too. So, like personally, I only look at the Binance trade book and stuff like that for Bitcoin, even if I'm trading in another exchange. And I'm looking at the futures for that so that I can see where these whales are sitting, even if I'm trading spot. It's a good habit to get into. And if you're trading even things that aren't Bitcoin, you generally still want to watch Bitcoin because Bitcoin will affect what the other altcoins will do. So if you don't already do that, highly recommend you doing that because it does play a big factor in trading. With cryptocurrencies, at least, gold and other stuff, way different. But with cryptocurrency, you have to factor in that it's a niche trading style that, Bitcoin is king, that you kind of have to, revolve your trades around Bitcoin. So now you got momentum sensitivity. Now, momentum is something we added just so you can kind of see when things are going up and down, aside from the buy and sell stuff. So what this is these pluses and X's. So the plus means momentum going up. The X means momentum going down. So essentially they're just there to help you identify momentum in the sense of if there's no signal at all, it's kind of like it doesn't mean the price won't move, but it also kind of means it's in a weird little like consolidation kind of standpoint where not too much, not too little is happening, which could mean reversals or continuations. Consolidations are a nice one where it can go both ways. You know what I mean? Anything can happen. You know, it's kind of died out a little bit. It doesn't have enough to go up. Doesn't have enough to go down. Let's see what happens. That's kind of what consolidation is for. So as you can see here, as the price rises, we're getting the bullish momentum. This happened. It dropped a little bit here, died out. Didn't have enough to pick bullish momentum signal. Another one, died a little bit. Another one. It's going down. It's going down. Now you hit a bearish momentum signal. Drop, 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 drop. Nothing. Buy signal occurs. There's no momentum signals in here, so buy signal occurred, but then it's kind of consolidated. Then you got some momentum, and then it died out again. So they can be useful for identifying these momentums, moving stuff on. But what is stronger than a momentum signal is the loss, not loss necessarily of momentum, but a negative momentum buildup. Now, this is a lot. These triangles, the red triangles and the green triangles, are a lot different than our momentum signals. So these triangles have a 100% correlation to our signal sensitivity. So how our signal sensitivity works is that we identify a buildup of bearish, like a bearish buildup of momentum and a bunch of other stuff, which signifies that not only is it undervalued, but there's also a high chance of a reversal. That's what these signal. So we're feeling it's undervalued, high chance of reversal, undervalued, high chance of reversal. Once it no longer feels undervalued with a high chance of reversal, that's when the signal appears, which means that it's no longer, it was bearish. It was very undervalued. It felt like it was very undervalued. And yes, I know it's not in the zones, but the zones, the code of the zones, it's not in the same algorithm for our signals for a certain reason, because signals shouldn't only occur when they're in zones. They should be able to occur in the neutral area. So no correlation. So our signal code believes that it's undervalued, and there's a good chance for reversal. And once that ends, that means it's like, okay, I've confirmed that the reversal is now underway because I'm no longer sensing so much bearish undervalue. And then that's how it identifies it. So, like you can see here, it's identifying it's overvalued. Now remember, it doesn't have to do with zones. It doesn't even realize it's in the zone. It doesn't know the zone calculations in this calculation for the algorithm. So it's saying I'm overvalued, which it definitely is. There's a high chance of a reversal. And so now we're essentially just waiting for a bar that doesn't say this anymore, and then it's going to have a sell. It's going to be a sell signal, and it's going to rate that sell signal based on a ton of different things on the probability of it going down. So like a 1 star means it has low probability, whereas a 3 star is a lot higher probability. Now, even though, yes, look like 4 star, but like, look, it's in this zone. You know what I mean? Like, it definitely is way overvalued. Like, sure, it can keep going up, and during a bull market, it will. There's times it'll happen. Same with a bear market. There's times that'll happen where it definitely should not go any higher. It's way too overvalued. This tiny little consolidation, minuscule correction did not make it any more overvalued or any less overvalued. It's still way overvalued. But it goes up. That's just kind of how stuff works. There's a whale. They wanted it to go up. People jumped on the hype train. They wanted it to go up. And that's how it goes. And usually when it goes way high like this, it goes sideways for a long time to try to bring, your RSI down, a bunch of other stuff down, trying to neutralize stuff before whales feel confident going back in at, maybe a slightly lower price, but they're like, okay, I feel like it's still a good time to get back in. So that's kind of that for our signal sensitivities and stuff like that. So hopefully you kind of understand a little bit what this all means. If I was a betting man, which I am, I would say, honestly, the price is probably going to come down soon. There's a lot more stuff I would look at than necessarily just our indicator here. I do always, when I'm trading, I always have YinYang RSI, YinYang volume, and YinYang momentum up. YinYang trend here and there might pop it up a little bit, but I do always use the SFX Signals and Overlays indicator in conjunction with YinYang RSI, YinYang volume, and YinYang momentum. Because in my opinion, that's the best way to find when things are actually moving. YinYang, and fear and greed, YinYang FGI, honestly, very useful. I do bring that up too. I don't take as much prevalence with that per se as my most useful one that, in my opinion, is YinYang momentum. YinYang momentum, hands down, one of the best ways to identify momentum movements with volume and all that stuff. The other one's very useful too. I like to look at all of it. I'm very much of a look at 5 or 6 different indicators type of trader. Not everyone is. You could probably just get away with looking at this one if you wanted to, but I mean, if you have access to this one, then you have access to all of them, because this is part of our premium one, and we're not talking about strategy stuff right now, just all indicators. So you have access to all of our indicators if you have access to our SFX Signals and Overlays. So you might as well get used to using them in conjunction. We have a tutorial video on how you can use the trend with the volume, FGI, RSI, and momentum one all together. Please watch that if you haven't yet. We will make another one doing a conjunction of all of it, but substituting trend with SFX Signals and Overlays, and also including our BTC halving indicator, because that one's important too. Like, your BTC halving is important so you can know the relative location of with a price and if it's actually accurate. So I know this is a tutorial for SFX Signals and Overlays. We're just going to load up our halving one for 2 seconds here. Zoom out a little bit. There we go. Load it all up. Yeah, I don't know why how TradingView works like this, but sometimes you have to zoom out really far for all the code to load. I don't know. It's weird. So this is our halving projection indicator. We are projecting 198,000 by 2020, by basically the end of June of next year. And you can see we're still undervalued on where we should be. To hit this mark, technically right now, we should be at 113,000. So we have some work to do. Like we hit the line and we got rejected by it hard. We came all the way down. It's right now we're struggling at this zone area right here. So our BTC halving indicator, let's just minimize this for a second. It's got a bunch of different zones. And these zones, if you look into our BTC halving indicator and how it works, these zones all take into the fact of the price, the total circulating supply, the max circulating supply, and then it bases it off of how much it should be moving up each halving mark. So you can kind of see like the red zone just touching it there right near the end of the last halving, which occurred right there. It went all the way up. Sorry about that. I don't know why I just did that. Sorry, that makes loud clicks. Sorry, I'm so used to using that. Swap over to here. Yeah, so then it comes all the way down. It actually went lower than lowest of the zone, which is going to be very rare. That shouldn't happen. If anything, if you ever see that happen again, buy Bitcoin. If you see it touching the top of it might be a good time to sell Bitcoin for the red. Yellow is neutral. So we're at the neutral level of our zones, but we are below our projection trend line towards reaching 198K by the end of June next year. So essentially, the price should not necessarily be above this line, but it should be around the line at all times. So there's going to be times where it goes above it, below it, but it should be near it. So right now we're actually still undervalued. We've got some room to go. So even though I'm a betting man that the price is going to come down a little bit, I don't think it's going to come down all that much. Sorry, we're just going to reset a few things in here, come back over. I'm sorry if there was any loud clicks in this video. That is my trackpad. I have a mouse beside me, but I'm so used to using the trackpad that sometimes I forget how loud it is in recordings. That is my apologies. But yeah, so the price, honestly, I don't think it's going to come back too much, but I think we are going to see about a week of slow consolidation, maybe down to about the 85,000 mark. I don't know if it's going to come much lower than that personally, but it's definitely going to come down a little bit. It might come back. It might consolidate for 3 weeks, all the way to like 85,000 even over here, where it's going to meet the median line, and then it's going to keep going back up. I don't think we're going to see any real hard correction going on here, or it's a reversal. Just a slight correction, balance some things out, and then it's just going to keep continuing on. So that is our hypothesis and prediction for what's going to go on with Bitcoin right now. So there's a few other things in here that you can change. Essentially, show momentum changes. It's these guys. You can turn that off if you don't want to see that. Bar colors, you can turn that off if you don't want to see that. Your change of characters and break of structures. So live update means you want to see the dash stuff. If you only want to see the confirmed, you can take that off and you can just see where it's confirmed. Don't recommend that. Signal location, okay, so let's see that. So last signal, the reversal, where we're saying, remember we mentioned how it goes after we're saying that this is no longer, so this is saying bearish, now it's saying it's no longer feeling like it's bearish, so it means, or bullish, I mean, so it's going to go down. That's kind of what that means. You can do a first, so that'd be this one instead, and that's going to show just a reversal signal there. Or you can do both. So both is interesting for many different reasons. So I'm gonna find. So like now, if you look at, sorry, for instance, I like last, that's what's set on default. You don't see it's a sell yet. If you did first, it's saying that this is a sell. So there is a difference there. So if you're, based on how you're trying to trade, there is a difference. So if we go back to both, I'm trying to see, yeah, here we go. Okay, so it started here. It's a 1-star buy here, but now it turns into a 3-star buy here. So it does rank it on the start and the end. It's only going to display it based on how you have it, but it will rank it. So it can be useful. So if you saw this and you saw this, you're like, okay, now my chances of this being a good buy has gone up 2 ratings. That could be a good signal to, maybe you want to get in. Vice versa, there's times where it can go down. You know what I mean? Like it can go from a 3 to a 2 or a 5 to a 4. That means it could be dying out a little bit. It might not be as good of a time to sell if it goes down a little bit. These are things that you can play with. We just like to leave it on the last. It can be nice to see that information, but I do find it can almost also clutter the screen a bit. So we just keep that off just for that sake. Sometimes I'll toggle it on for 2 seconds, but I wouldn't worry too much about this stuff. You can dabble with it if you want, but like you can see, you can change the zones and stuff like that. You can change the coloring of this whole thing. So if you want your buy color to be, I don't know, a purple, you can change all the buy stuff to purples. So you can have some fun with this. So we might conclude it at that. So essentially, this helps you, find all of your different informations for your buy and your sells, your break of characters, your change of character break structures, the momentum building up for the buy, the bear momentum. It's useful for so many different things, and it's just got to get creative with it, play around with it, figure out what works for you, and have some fun with it. But don't feel afraid to combine it in conjunction with a bunch of our other indicators. We, like, personally, I love trading with the BTC halving one and SFX and YinYang RSI and YinYang momentum and YinYang volume. Sometimes the FGI. I put all that up. Sometimes they'll pop up the YinYang trend just to see this information, and yeah, no, it works great. I wouldn't rely on any one indicator because TradingView has limits. But when you use multiple indicators, you can bypass some of those limits, like display limits. Like, we can only display so many different labels and plots and all that stuff, which is capped out on this indicator right here, and alerts count into that. And we have a pretty good amount of alert stuff on here. So if you come in alerts here, you got, let's move this down so you can see a little better. It's still going way up there. Okay, well, so buy signal any rating is the top one. I guess you just can't see that, but then you get all these other ones. Buy signals 1 stars, continuation, sell signal, the price crossed above or below the different zones, trends changing, like the bar color trends. So you have a lot of different ones that you can set alerts for. Unfortunately, with all the limitations with plots and alerts, we've capped it on this one. But you can bypass that by having different ones on. That's why generally it's a lot easier to have multiple indicators than one indicator that has too much stuff in it, just because of limitations with displays and stuff like that. So yeah, so we hope you guys enjoyed this tutorial. If you have any questions, comments, concerns, or things that we can improve upon, please feel free to either reach out to us on YouTube, on this tutorial, or through our website or Discord, and we'd be very happy to get back to you and try to implement any changes you have. So yeah, have a great day, and thanks for watching, guys. Take care.